One problem with COVID is we've all disguised ourselves with beards, and I think we can have our next speaker down under the Trade Descriptions Act. I've been frantically trying to find him, given he's updated his look significantly from that which I was advised. But given I've lost 5 stone, gone bald, and grown a beard in a similar period, you are forgiven, Graham. It's my pleasure to introduce our solo speaker, speaking on Mauritius on the go, around African growth. Graham Robertson's chairman of Intra-Asia Group. He has spent most of his life in Asia and Africa in many sectors, including mining, infrastructure, corporate services and operations. As a managing director and president of Indonesian businesses, he helped develop up to 2005, and at that point he moved on to Intra-Asia Group, where he's focused on corporate and financial services and mining, particularly bringing money from Singapore and Mauritius into Africa. Having visited Mauritius a few years ago, I know what a powerhouse it is, and I'm very excited to find out more about the opportunities that lie both for Asia but also for Africa. Graham, thank you very much for speaking today.
Well, thank you very much. I'm very happy you made the remarks about my coronavirus beard. I feel very relaxed. I can almost disguise myself with whiskers now. Mauritius and Africa. I think the first point of Africa, Mauritius has put about $82 billion of investment into Africa, compared to about $28 billion from Europe and $27 billion from within Africa itself, mainly from South Africa. So the situation with Mauritius is quite significant. Approximately 60% of foreign investment from Mauritius is in the form of shareholdings, loans, and debt securities directly into corporate Africa, and 25% in portfolio investments in shares of African businesses. 47% of investment into Africa, excluding South Africa, is under double tax treaties, and 53% is not covered under tax treaties. Mauritius has 23 double tax treaties and investment protection treaties with sub-Saharan African countries. So it means a direct corporate tax revenue from Mauritius, but it encourages foreign investment into countries in Africa where the risk profile may be high or too high to enable investment to proceed. Mauritius has committed to international standards in combating money laundering and terrorist financing, and is more compliant than the United States of America, Canada, Ireland, as a member of the Financial Action Task Force. It's also a signatory to the US Foreign Tax Compliance Act of 2014 and OECD Common Reporting Standards. And it's currently processing its move off the grey list into the fully compliant jurisdiction. Mauritius is a real and dynamic economy with a GDP of $24,000 per capita in purchasing power terms. It's a trading economy with 12 trade agreements, including 7 with relevance to Africa, including the first trade agreement made by the Chinese into Africa. Mauritius is an Indian Ocean island, but for its locational purposes, it's a member of the African continent. Mauritius, the International Financial Center of Mauritius, facilitates efficient trade and investment. It's home to a unique cluster of financial and professional service firms that form its International Finance Center: banking, corporate services, funds, insurance, legal services, and accounting. This sector accounts for more than 12% of economic output from Mauritius, and Mauritius has global business and cross-border activity. In December 2020, there were 20,559 entities registered to conduct global business from Mauritius. Mauritius is also a good place to live and work. Those who have been there know of the beaches and the environment. It has a lower tax regime. Maximum tax rate in Mauritius is 15%. If you're a family office and you move to Mauritius, you have a 10-year tax holiday. If you set up corporate headquarters in Mauritius, you have an 8-year tax holiday. And any other global business is usually subject to a 5-year tax holiday, which, of course, substantially reduces the tax rate. There are other schemes which allow an 80% deduction, which effectively give you a 3% tax rate. So as a low tax rate jurisdiction and as a very well regulated in terms of the banking side, Mauritius is outstanding as a facilitation point for investment into Africa, and to facilitate also the holding of funds in terms of investments in Africa. Mauritius is also very stable, politically stable. It's probably one of the most democratic countries in the world. You know, a sleepy fisherman fishing at sea hears something about a political debate, and they throw their arms up in interest, and there's a very dynamic opposition. So Mauritius is certainly a very democratic country. In terms of the legal system, the Court of Last Appeal is the Privy Council. The legal system is based on English and French law. Mauritius is also a multilingual society with French and English interchangeable. Parliamentary debate is in English. A lot of the press is in French. So it's an interesting one. So its application in Africa spans from the Eastern African side, the English-speaking side, into the Western African side, or the French-speaking side. Perceptions of high risk in terms of the banking and financing of African development is something which is important. I think the banking section, when you look at developing an operation in the DRC, there's a great difficulty in perception of risk. And in terms of Mauritius, one invests in Mauritius, and that de-risks the investment in Africa, because the funds flow from Mauritius to Africa. I'm sorry, I think I've got the wrong presentation on the screen. Yes, I have. What we have is in Mauritius, we have a number of new city developments which bring in international baccalaureate education. So education is very good. We also have a zero capital gains tax, a zero withholding tax. So taxation, as I said before, is minimal. I think in terms of Africa operations, where you look at employing expatriate expertise, it's easy for their family to live in Mauritius, and they can fly in and out of Mauritius. This is something in the mining industry in Australia which is very prevalent now, where you have fly-in, fly-out operators. And if they go into the DRC, the other thing, of course, salaries. You can pay salaries in Mauritius. The salary earner is working in say the DRC or Congo or somewhere like that, and where tax on salaries is about 35%. In Mauritius, he's a non-resident, so there is no tax on salaries, and this acts as an incentive for the remuneration side of expatriate employment. So that's something which is interesting. A lot of the trade out of operations in Africa can be set up through Mauritius, where you have funding in US dollars towards the African operation. And as those who understand Africa know, it's very difficult to expatriate US dollars out of Africa. You've got to have approvals from the central bank, and that can take a very long time. We manage and administer a number of companies in Africa with operations, and we develop trade in Mauritius, so we earn US dollars in Mauritius, and that pays for the financing of the US dollar costs of the investment in the African country, and is fully secure by the Mauritian system. So in Mauritius, there's a number of licenses available. We have funds, we have global companies, we set these up, we structure investments. So we're a facilitator. We recognized in Africa there's a cost for facilitation. It comes into Mauritius, but in terms of getting the investment in African countries, we de-risk it. So it becomes more relevant. It employs more people. The people pay taxes. It's economic development in the country, which is the respondent country. And I think that's an extremely important point in terms of investing into Africa. So in terms of the banking, we have 3 local banks in Mauritius. The bank which I'm associated with, and the gentleman with the turban sitting on the row is associated with, is Afro-Asia Bank. We're the 3rd largest bank in Mauritius. We deal with 160 different countries in the world. So you can imagine it's quite a dynamic trading bank. We call ourselves Bank Different because we don't have branches. We're not a retail bank. We're a corporate bank, and for ultra high net worth and for investors into Africa, and we facilitate that. We have about $4.2 billion US dollars under management. So we're a small, medium-sized bank, and our outreach is quite extensive in Africa. We fill the space which is left by Standard Bank and some of the larger banks there in terms of funding. As I said, it's risk which is the major funding problem in Africa, and this is something which we look at very carefully. And Mauritius is also a wealth manager. There are some very interesting wealth management companies in Mauritius, so it's a natural conduit for African money that flows out of Africa, profits or dividends that flow out of Africa through Mauritius, and it's open to the rest of the world, and that money can go into any country. There's no controls on that. So it becomes a wonderful facilitation center. So that's all I wanted to say about Mauritius and its impact on Africa, and its ability to further develop business in Africa and to protect the funds employed into Africa. So thank you very much.